All right, back to work. Break time's over. It's Tuesday evening. Getting ready for Wednesday's trading session. But we saw some great moves today. We got some great setups on my radar for tomorrow. You know how we roll on these videos. I'm going to cover all my favorite trades in tonight's video, so you get a game plan to make some money on Wednesday. Before we jump in, though, got a lot to cover here tonight. Before we jump in, make sure you subscribe to our YouTube channel. I don't want you to miss tomorrow night's video upload. And as always, if you guys enjoyed this video, do me a favor, hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro. Let's get ready for Wednesday. Hump Day coming right around the corner. This week is flying right by, this first week of August. So where's the easy money? Where's the low-hanging fruit? Where's the good 5x, 10x, 15x trades here for tomorrow? Well, you'll notice everything's looking pretty bearish, right? Bearish on the Nasdaq, bearish on the S&P, bearish here on the crude oil. We definitely got a couple chances for some nice squeezes, right? Had a great day today in our trade room, picking those bottoms and buying those squeezes, the thing we talked about last night on the video. But the buyers couldn't hold it. You know, they failed to retest major highs, and now we're rolling over. And I'll tell you, we're going to definitely cover both sides of this here right now. But we got a bunch of pendulums, right? Bunch of pendulums on this chart right now. And if you've been paying attention the last few weeks, these pendulum swings are great at predicting big moves, potentially some nice big moves down the downside here. I know we're bullish overall on the E-minis, right? But we got some great reversal setups watching for tomorrow. I'm going to cover, don't worry, I'm going to cover both sides. We'll cover the short side, obviously. There's a bunch of great spots here for some shorts right now on all three of these markets. And really, if this market, these markets could really end up tumbling here pretty good here in the early part of tomorrow. I'm going to cover the buy side too, because if we definitely have potential bounces off those lows. And if things change overnight, we may see some rips going higher. So I want to make sure we know how to trade all of that for tomorrow. I'm going to make sure we're all ready to make money no matter what these crazy markets do here this first week of August. Before we jump in, speaking of tomorrow, tomorrow's a Wednesday. We get a lot. We have a couple things you want to be aware of tomorrow on the kind of schedule for tomorrow. There are three kind of key components that you want to be aware of. First of all, we get the ISM services number at 10 o'clock Eastern Time. That will be the biggest scheduled news that we know about for tomorrow. The reason I say scheduled news is because we're also watching for Fed speakers. The Fed speakers are popping up left and right now. We heard from Fed speakers this morning, middle to late morning, and really kind of poured cold water on the rally, suggesting that the Fed was not done raising rates, inflation was not under control yet, and I think that kind of led to that squeeze not fully blasting but rolling over. So we are definitely going to keep listening in for Fed speakers coming in tomorrow. We know about one at 10:30, but they've been popping up left and right, so we don't exactly know when they're going to be coming out. But you know me, I'll have my live news feed running tomorrow in our trade room, and I'll make sure we're keeping an eye on that. And then, of course, you got Pelosi, right? Speaker Pelosi, she made it. She touched down in Taiwan. I think everybody watched the live stream this morning. My goodness, that lady, she's very good at getting attention. Now, of course, we'll wait and see what happens tomorrow, right? Tomorrow, the drama continues. We'll see about the meetings, and we'll see if China reacts, because that's the kind of the big deal right now. We're kind of waiting to see tit for tat, who needs who here, I guess, in these global superpowers. So anyways, long story short, three key things for tomorrow. One is Pelosi, right, in Taiwan. Who knows what that's going to do tomorrow. We got Fed speakers tomorrow we're going to keep our eyes on. And then again, the ISM Services Index at 10 o'clock Eastern Time is the big news that we know about for tomorrow. So we're going to keep those on our radar and look for those to be market catalysts tomorrow morning in our trade room. Now, back to our charts, guys. Whether you trade one of these markets or you trade all of these, you better make sure you watch all the way to the end, because you'll learn something new throughout the entire lesson here tonight. I'll provide different trade ideas, different trade variations, different advanced tactics as we go deeper into this video, and I like to save the best stuff and wrap it all together towards the end. So stick around all the way to the end. If you're serious about your trading, grab a notebook, grab some screenshots, and we'll dig right in. I'm going to go Nasdaq, S&P, and crude oil. Be aware, though, the Nasdaq and the S&P are pretty similar. They're pretty similar. So everything I talk about here on the Nasdaq here tonight is really, for the most part, can be applied to the S&P and vice versa. On the NASDAQ, this is a 4,000 tick chart here. 4,000 tick chart on the NASDAQ. You can see all the details in the upper left-hand corner of each of these charts here right now. What's the most important factor on this chart? Well, there's two key components on this. One is this trading range. This trading range, of course, is a very, very big clue. We made that move down. We were picking bottoms off that low, picking bottoms off that low. Thank goodness the second one made a little bit better of a run there. The bottom line, though, is that trading range is a really big, important clue, because as the market ran up and now we rotate back down, we know the amount of that move above is oftentimes the amount of that move below. If you want proof of that, we pretty much saw that today. We saw the amount we went below yesterday's trading range. If you watched last night's video, and surprise, that's exactly where it went on the other side of that trading range. We call these pendulum swings. They're basically just a symmetry technique on a trading range. So now we know, first of all, what does that first kind of insight tell us? It tells us that we have a lot of momentum now for the bear. This is a bear market at this point here, short term, of course, right, bearish. And we also know the amount of that move going low will probably be somewhere right around, what is that number down there? Right around that key level of support at 698 half there. So what that tells me is that pretty much bears are going to be looking for, if we know that this range is a magnet, we can assume now that bears are looking for shorts up around the top of that channel, up around the major battle zone overhead. Those are great places for shorts as we bump higher. And then if we roll over here, right, this is where things get a little more aggressive as the momentum starts to build. We're looking for shorts as we go lower, basically to complete that pendulum swing. So those are the key kind of takeaways from that first key insight. The second one really is kind of lending to this. If you look at just this chart, you don't get very much out of it. But if you look back in time here, right, you'll notice we're now making some lower lows. We're making some lower highs. This really could be just one big channel. You know what I mean? And it could really kind of, in the bigger picture, if you look at this like on a 4-hour chart or something like that, it will begin looking like a bull flag, right? So bull up and then rotating down. For my purposes, though, as a short-term trader, right, I'm not trading a 4-hour chart. For a short-term trader, we can kind of ride that momentum, right, ride that rotation back down again. We are, again, remember, like I said last night, we are overall bullish right now, but we're starting to feel that kind of turn. The buyers were unable to really take out those big highs and hold that high. Like I said, we got some great squeezes that we talked about last night, but the buyers just weren't able to really kind of finish it and hold it, and now we're looking for this rotation back down again. So how do we make some money on these clues here right now? Well, like I said earlier, the three basic places we'll look for is right here, and then of course as we go lower. What I'll do is I'll cover the short side trades on the NASDAQ tonight, and then I'll cover the long side trades on the S&P. So we're going to cover both sides, and we'll kind of play off each other again. Everything we talk about here on the NASDAQ can be applied here to the S&P. The bears have control with a range down underneath me. So what I would love to get is one of these two types of setups. I'd like to get a push back higher here. And really, this could be in this area, could be this area. You know, in all reality, this whole area right here is really just an area of interest. Okay, just be aware of that. What I'd like to do is try to get this market to get up above some of these levels of resistance, see if I can trap in some of these buyers, right? Get the buyers to come in and try to buy that pullback for that run back up, obviously not seeing that range below. Once those buyers come in and they buy that pullback, now remember, rotation off the high suggests we're going to end up back inside that trading range. So the easiest way to make money in a bear market with a range below you is to look for stops, right? So you wait for those buyers to come in, let them buy off that low, and then literally just sell right into those stop losses as we go down. I call these failure setups, and we learn about that stuff in our free trading classes here on the website. Now, once we get that failure coming down, then I can watch the moving average and grab that first pullback. Okay, these are very common. Failure into pullback combination, right? Where would be a good target on this? Easy. At the low of that range and then leave some down right to those big lows as we go. That would be a good trade. A better trade, though, much better trade, would be, let's say now we really pop, right? After all, that's a pretty strong move. Anytime we see a strong move in one direction, we know there's a good chance they're going to retest that level. I say good chance because you'll notice they took out the opposite side of it. Whenever I see a strong move in one direction, I know we're going to probably get a retest. But if it collapses and takes out that low, right, kind of basically takes the whole thing back, I mean, how bullish can we really be? So there is a strong move there. And for all I know, who knows, right? So maybe we do bounce up and take out these highs. Now, this will be my favorite short for tomorrow because now we can really rope in some of these buyers here. Remember, at this point now, we're at major resistance with a range below us. Horrible place to be a buyer, but don't tell the rookies out there. Hopefully we see some weak hand traders coming in, right? Some of the newer traders coming in, buying a couple times. In this example, because that move higher is so big, we have to kind of give the buyers a little bit more of the benefit of the doubt. So let them try once, let them try twice. Now, once they try twice, again, think about where's their pain. Again, that's the easy way to think about it. Where's their pain? And sell right into those stop losses. Okay, and you'll learn more about the kind of the advanced entry tactics on this in our video classes. But the basic is one try, two try for the buyers, and then hit them right where it hurts. Now, once those buyers fail, then the fun starts. And now what oftentimes happens is the market will collapse because the buyers got run out of the game here. Now, quickly, draw that trailing off that low, find a channel off of that high. And my favorite trade on this is a trap right above a prior swing. So right above those prior swings on top of that channel. Now this could be a trap. It could be a failure pattern off the moving average. It could also be one of those pullback combinations, right? Where's my target on that? Again, you know where it wants to go. It wants to go back to that range low, and it really wants to bury that, 12, what is that, 12,815, 12,820 area right down at the real low of that range here. So it's a two-try failure. And then again, I'll take any one of the traps, the failures, the pullbacks, any one of the price action entries we talk about in that free trading class. And I know a lot of you guys have already taken the free class. I always get so many great emails every week. You guys making money with the free courses on the website. But listen, if you're one of the few people who still haven't taken that free trading class to learn all the entry tactics and the overall strategy I use in our trade room, I'll put a little button up there, a little link up there for you in the upper right-hand corner. If you're anything like me and you hate missing the best trades each day, or you're taking too many losses, the strategy I teach in that free class will get you into more winners, help you avoid those expensive losses, and will give you a ton of confidence. Confidence is the key, and you'll get a lot more confidence once you learn that strategy. I can pretty much guarantee you that. It's perfect for someone trying to make the jump into full-time trading. So grab that link that popped up there in the upper right-hand corner. You'll love it. You'll love it. And send me an email. Let me know how you do with it, because it's always so inspiring. So that's how we're looking to short this thing as it goes higher here. All right. And again, I'm going to talk about the breakout going higher, because who the hell knows what's going to happen, right? We don't know what's going to happen tomorrow. It could rip going higher. Again, we do have an overall bullish market right now, right? It's just right now showing us a very good clue here for some reversals, right? Some pendulum swing reversals. Now, here's where the fun starts now. Well, maybe not the fun starts, but now what if the market goes lower? Okay, first of all, as it goes lower, what you're going to want to think about here is this channel is going to start to get narrower and steeper. Okay, so this is kind of what you're thinking as we go lower. All right, right now, obviously, I have this big wide channel because that's just all I have to work with. For example, you want to see a good example of that. Look at the S&P right now. Okay, here's the S&P. So notice how the S&P is kind of rolling over a little bit more dramatically, and see how I draw that channel down and back up like that, right? That's where the money is right now off the top of that new channel. Okay, so looking at the Nasdaq here once again, okay, you can see that's going to be a big part of it. So if we do end up kind of rolling over here, right, rolling over, this is exactly where we start finding those bigger channels, or steeper channels, I would say, find those big highs, right? I always go out, find those bigger highs, and then start looking for traps, right? Looking for traps. And I try to get above those prior highs. Okay, that's where traps are going to live, and you'll learn more of those in the free class. And then again, buyers coming in, right, trying to buy. We're selling into stops with a failure, and we're grabbing that pullback combination. Does that kind of make sense, right, as it goes lower? So if we just kind of punch lower here, right, and then kind of bounce back up, I'm focused on selling those traps, those failures, those pullbacks for that roll back over, ultimately taking out that low and trying to get that pendulum going as we go. Now, what if things really start to pick up? So, for example, let's say, let's say, for example, we push lower, we grab the pullback to the moving average, and now we just rip, right? Now we blast through that low here now. At this point now, if it's a really strong move down, we're probably not going to get that big pullback, right? I would love to, don't get me wrong, but the odds of that happening if we see a really strong, what I call 1, 2, 3 breakout, 1, 2, 3 breakout, if that really rips and runs lower, now we have to get a little bit more aggressive with the way we draw our channels. So what we'll do is we'll find that low. We'll bring it, it's basically a smaller channel, right? It's a smaller channel. We find the smaller channel, right? We mark up again. Same idea, right? Same idea, except you're simply hitting the gas pedal a little bit, a little bit more on this one because the trend is really picking up. And again, where do we think the market wants to go? It wants to go down to that pendulum swing. So take out some profit at that low, leave a runner down to that, 12,700. Another way to look at this as we go lower would be, let's say, for example, we can pop down and we grind down. Pop down and we grind down. These are easy. Simply mark a trend line off those lows, bring it up around that high, right? And then again, look left, find some prior swings. Now, again, I'm kind of painting you the basic picture on this, right? So we'll look for traps, we'll look for failures off of that, you know what I'm saying? Right? So that's kind of the general idea as we go lower. If the party was really to kick into gear going lower and it was a really strong move down and a shallow pullback and a lower low in price, then traps begin to work. Okay, this will be the most aggressive one, right? This will be the one where it's like, whoa, what the heck happened? And remember, you need to get that lower low. Okay, a higher low is not going to do it. Okay, higher lows don't do it. It's got to be a strong move. The shallow pullback will drive everybody nuts because they're all trying to get into that move, right? The lower low will confirm it's not going to be a reversal or a V bottom, and we can look for that trap off of that high, trying to grab that pendulum swing. Okay, so that's the way I want to look to sell this market as we're going. I would also say too that let's say the market takes off, we get that short, and we really pummel. Right? Like it really pushes down into that low. If we end up getting, right, again, we'll get our shorts on the way down, but if they just finish that run with a real strong pop, remember, anytime we see a strong move in one direction, what do we expect? We expect a pull back and a retest of that level. So if we end up, right, and again, this can also be applied to the S&P as well. If we get something like that where it comes over and just crushes it, right? Just rips and runs lower. All of that momentum is going to be pretty difficult to stop. It's not impossible, and we're going to talk about how to buy that in a moment. What you want to do, though, is in these situations, start thinking about prior swings, right? Use those prior lows. You know what I'm saying? Use those as your key areas. And what oftentimes will happen is obviously some profit taking down here. Price will kind of V bottom off that low, and you can catch the buyers coming in. The buyers will come in and they'll try to rip it back into that range because obviously it's a range above us. But once those buyers try with all that momentum going lower, just slip your order right below that low and use those stops as fuel to sell back down again. Right? Does that make sense there? So that's going to give us a pretty good roadmap here for the sell side here on the Nasdaq and for the most part on the S&P. Let's talk about the flip side of this now, right? How do we buy this? What if it rips higher? Can I buy it? What if it goes lower? Can I buy it from there? Let's talk about that now over on the E-mini. Now the S&P, of course, is very similar. Okay, we've got a trading range kind of not in the middle, but the lower kind of portion of this chart. Although we saw some pretty nice bounces off of this low here, the buyers, of course, they just weren't able to kind of take out those highs and hold. So that, of course, gives us now that range rotation off the high. Today was a really good example in our trade from this morning that you didn't need pretty or perfect to make profit. You don't need really clean charts as long as you got a good game plan. And if you missed last night's video, go back and watch it, and then you can see what happened here for today. So range rotation off the high. The reason why this is most important is because A, it's a lot of momentum coming down, and B, it pretty much gives us a bullseye of where the market wants to go. Okay, next thing is just the NASDAQ, the lower lows and the lower highs. You can see on this one probably a little more dramatic, right? Lower lows, lower highs. Again, if you look at this on a 4-hour chart right now, it'll look like a flag, right? Like a big bull flag. Because again, we've had a couple of weeks of nice bullish runs there, that kind of that relief rally, that sigh of relief everybody had, that earnings weren't falling apart. As of a few weeks ago, people were worried the earnings were coming out the last few weeks were going to be a bloodbath, and they weren't. The economy still appears to be holding together pretty well. But again, the Fed made it pretty clear today, inflation is not under control. They will keep raising rates. I think that's where this kind of heaviness now is coming in. It was almost like a bit of a bucket of cold water to wake people up, like, hey, we haven't pivoted yet. We haven't turned the corner yet to a bull market just yet. So we definitely have that little hint of bearishness coming in on the longer time frames here right now. And again, as we mentioned on the NASDAQ, the key for selling this thing right now is selling those pops as it goes lower, right? Finding those new channels, you know what I'm saying? I won't go over that again here right now because it's pretty much verbatim on the NASDAQ. So how are we going to buy this market? Can we buy this market right now? It's going to be difficult. I'm going to warn you right now, because the hardest part is that as we go lower, okay, you will learn this lesson the hard way if you don't take my advice on this. But trying to be a buyer at a level of support, when we're rotating like this off of the high, you'll find great signals to get long, but they'll keep on getting short, right? They'll keep on being sold here. That's the hard part about buying this. If you want my opinion, the best way to buy this market would be with a breakout going higher, right? So literally we go back up, take out the high, and they punch through that high, which obviously is a pretty tall glass of water. It's a pretty big ask right now for these buyers, considering what happened here a few hours ago. Is it impossible? Of course not. Anything's possible right now. Anything is possible. We want to keep every option on the table. The other one would be, as we go lower, that double bottom reversal or a crown reversal off of this low. So how do we do that? Well, first of all, if the market runs higher, what do I need to see at this point to want to buy a breakout? Well, first of all, we know this whole area here is very, it's all resistance up here, right? It's not just this area, right? It's that area. There's actually a few more I just purposely chose to remove here because it wasn't really necessary. But we need to get back up to these highs. We have to hold that pullback, and we have to blast, right? We have to literally rip ourselves out of this trading range, because if not, we're going to see sellers come in and attack these highs here like they've been doing over the past couple days here. So as we go higher, think about now those 1, 2, 3 moves. Strong move up, pull back to the moving average, and a blast right on through. Okay. Now, I would imagine a reversal like this through those highs would also be accompanied by some sort of headlines, right? Pelosi has a great meeting in Taiwan. Corporate earnings come out, great. Fed speaker says, nah, inflation's nothing. We got this, we're under control, right? There's going to have to be some change in overall sentiment between now and then. All right, so headlines need to be very bullish, and personality, the sentiment needs to have shifted across the board, or else this will just stutter here and drop right back into that trading range. Okay, makes sense? Now, if I can get that 1-2 blast, remember, it's got to really blast up there. One thing about these moves, you can't trust that first move up. Okay, you can't trust it because it'll come right back and fail. It's a range. So once they do have that 1-2 blast, then we can go out, we can find a new channel off that high, mark off that low, drill down. This is a 10,000 tick chart on the S&P, and then look for our entries off of that low, right? And again, right, you'll see literally hundreds of examples of things like traps and failures and pullback combos inside that free class that I mentioned earlier on in that. Now, if we do get that breakout, if we do see that breakout going higher, where do we think the target's going to be as we're going higher here? I've got that 67, but an easy way to think about finding targets is the first leg, right? The first leg and the third leg, okay? Markets love to trend one leg, two leg, three leg, and usually that first leg and the third leg are almost identical. Not always, but, almost always. They're very, very similar. So if we can get this thing to run up, right, pull back here and blast through these highs here, then we at least can find our entry channel to use below prior swings, et cetera, and then we can use this breakout leg, right? Use that leg now as the measuring leg, and that will help us identify kind of where that fine-tuned exit target is going to be. I mentioned this last night on the video. If the buyers could wake up on Friday afternoon and they were at 42.04 3/4, that would be their mission this week. If I had to guess what the buyers would love, kind of the buyer's home run, the dream come true right now, we'd be back to that 42.04 3/4, and obviously plus some, but that would be a dream come true now for the buyers, because that's the next big pivot level on a weekly chart. Open a weekly chart and you'll see what I'm talking about. That 42.04 3/4 is where they want to go. So we've got to get up, we've got to hold that pullback, and we got to blast, right? Blasto through that high. Or we've got to get up and we got to see a short squeeze, right? And what that means basically is that fluttering of price action. Okay, the fluttering of price action is an easy giveaway because it tells us the other side of that market is walking away. That's basically what a pop and grind is all about, which could easily happen. But again, there'll need to be some sort of change in sentiment and change of headlines right now, right? So mark up that high. Now, in this obvious example, it'll probably go something like this, where it'll go up like that, right? It'll go like that, and it'll start to pop and grind from there. So we'll draw that trend line off those highs, draw it off that, right, that bigger low, you know what I'm saying? And then we'll go out and we'll find those prior swings, and we'll look to get whichever one of the entry patterns we can find off the low of that channel. Okay, this will be first leg, that'll be third leg, and we'll use that for our targets as we go. That's not going to be easy. That's not going to be easy. These buyers have some work cut out for them as they go. Now, we mentioned earlier that a move lower is likely, another short coming off this area, right, and a retest of that low. Okay, so this is where now the buyers can start to really sink their teeth into. Just like we saw over here, big move down or strong move down, they retest the low, and see how that's the one that pops? Okay, so just like over here, that's kind of the same idea we're looking for, right, around this pendulum swing. So let me get this out of the way here for a second, just to keep it nice and clean here for us right now. So, two things you want to look at. The one that will really be the most reliable for you as we go lower here, if we go lower, is again to wait for that pop up, let them retest that low, right? That will be, as we always say, mission accomplished. And then once those bears come in and they've retested that low, now remember, the smart money is selling high. The smart money is not selling low. So once we start seeing those bears come in with their one try, with their two try, now remember, the easiest money you're going to make is when you're trapping those, in this case, the sellers, right, on the wrong side of the market. At this point, we're at support levels with a range. We had a very strong move down, but they've already retested. Mission accomplished, right? There's no unfinished business at that point. Make sense? Okay, now bears come in, they're trying to get short. We're going to use those stops to light this thing up as it goes higher. Hit those stops with those two try failures. And then as we go higher, I'm looking for that channel across that high, mark it off that low, and I want, as always, I want that first test. Okay, that first test is the best test. So 1 try, 2 try, we are running stops with that 2 try failure. That's the reason why that trade works so well, is because you're buying when sellers are also buying, because they're stuck in a short trade and they have to get out. Only way to get out is to be a buyer. And then again, this would be a trap, a failure, a pullback off of that low. Where's the best profit target on this one? The other side of that trading range. And then the market will try to take out some of these highs over here. So 41.21, right? And ideally will be a big pendulum swing, right? Ideally, it wants to go back to a full pendulum swing again. It's a little bit tough to hold the whole thing to get that pendulum swing. The way that I teach it in our trade room is scale out of your positions by taking profit at well-known levels overhead. Because you never know. It may go up and come tumbling right back down into that trading range. So take your profit at strategic locations. Not every trade can be a home run. You'll make more money in the long run. Now, that's probably the most reliable way to do it. Let's say, for example, though, that we get a strong move down, right? The bears come in, okay? The bears come in. They try to sell it, and they miss that low, right? And then we go back up again, and they try again, right? And they try again. At this point now we have potential for what we call a crown reversal. Now, here's the most important thing to remember about a reversal, okay? We need to make sure that the stronger the momentum, the bigger the reversal pattern is. Okay, stronger. It makes sense, right? You're trying to turn this whole thing around, and I don't want to be coming down and going, okay, there's 1, there's 2, now buy it back up again, right? It'll pop up and roll right over and stop you out in most cases. So what you want to remember on this one is, if we don't, now remember, the ideal is to get the retest, and then you can get aggressive going in. But if we don't get it, okay, that's what I'm saying here. If we don't get it, if we pull back and the bears try it once, right? They fail. Now we go higher here now. Okay? The big problem now is we have to get in as low as possible. Okay? For example, if we try twice here, the stops are going to be above this, right? Above that high right there. But here's the problem. If I buy at this point now, think about the risk. The risk is all the way down here. What's the reward? For the most part, it's really very small. It's only back outside of that trading range. Yeah, I would hope it goes all the way up, right? But I don't know. All we know is the range is the magnet. The range is the objective. So in a reversal situation like this, I don't like to simply buy in a stop losses in these situations because you're buying relatively high. What you want to do is you want to try to find a way, either off a trend line, right, to buy, again, much lower, because now your risk and reward is much better. Okay, the smart money will be taking that trade. Okay, there'll be a lot less pressure on you because the sellers are not selling down here, right? Where are the sellers selling? They're selling up here. Why? Because sellers want to sell high. And you got to think too, as the market kind of comes down, there'll be channels up here, right? So I don't want to be buying into that channel. I want to buy and give myself a little bit of a runway before we because a lot of times these reversals, right, they'll pop, but they'll just get crushed right back down again. And it's okay because you're already in at such a good price down here, you can withstand that. Does that make sense, right? That's why it's so important that when we get these strong moves down here, right, the ideal scenario is 1, 2, and a trap, right, below low. That's the ideal scenario because now the bears aren't selling down here, right? This is 1 try for the bears, 2 try for the bears. These crown reversals, these are the best ones because you're buying really low. I can draw a trend line off that high, off that low, right? You want to buy as low as you can because as we go higher, guess what's going to come in? More bears are going to come in. I want to buy up here, right? I want to be taking profit off that long by the time we get back up into that trading range. So keep that in mind if we don't get that retest. Okay? Again, the easy way to do it is up, retest, and then there's no problem now because now the bears already got paid, right? The bears already got what they wanted. Now we can run it back higher here. Hopefully that makes sense. Let me know in the comments section. If a light bulb goes off, give me a hell yeah in the comment section. If not, let me know if that doesn't make sense, and I'll make sure I can reword it, and we'll talk more in the next video. Wrapping things up here right now on the oil. Oil is a pretty easy one right now. I won't spend too much time here on the oil, but we definitely do have, and oil's kind of messy right now because OPEC's been teasing us right now with a production cut, and so it's been a little bit of a back and forth here on oil. There are two basic principles on this. One, of course, is that trading range. And you'll notice we pop up, we run up, and now we're rotating back down again, okay? Why is that important? Same reason why it was important on the NASDAQ and the S&P. We know that sellers are looking to sell off the high there. Sellers would love to sell that double top reversal. Pretty much the same strategy we talked about on the E-minis. If the market does roll over, we've got support down here, but you can imagine that bears are going to be looking for more shorts as we go lower to take out that pendulum swing. We also have a pretty clear shift now to what is looking more bearish in the long term. If you look left on this, you can see that big move down into a trading range. So it makes perfect sense that sellers, as the market pushed higher today, sold right into it. And what do you think they want to do? They want to go back down and take out those lows. Okay, so overall bearish right now, kind of medium term, longer term bearish, and we get some short term momentum here. The key component on this, stick to the short side here for right now until something changes. As we go higher, it's that buyer failure above the moving average, failure pullback combination. We talked about that earlier. If it really pops up, this is the one we hope for tomorrow. The 1, the 2, trap them in with 2 tries, and then as it drops back down, we find that new channel and we're grabbing those shorts. Again, I'm being very simple on this one right now because we've covered a lot of this already in good detail. 2 try failure, and then who knows, we'll get for that short off the high. If it pops up and if they can hold, right? If they can hold and blast to those highs here, right? They blast and run higher. Now we're on the rip going higher. We're going to find that new channel and we're going to grab that first test because the first test is always the best test. First leg, third leg is going to be your target. And the target on the oil for the buy side is pretty easy at that point. 98.30 is last week's close. 98.5 is a very juicy target for the buyers. The buyers would love to be back at that 98.5 level here for tomorrow. Again, doesn't look like right now. Right now, it looks pretty bearish to me. We'll see how this thing unfolds here overnight. And again, we're kind of waiting for more information on OPEC here about their plans for production increases or production cuts. Now, as we go lower, right? As we go lower, imagine now this channel gets a little bit tighter here. Okay, let's say, for example, we begin to grind down overnight, right? Grinding down. That's a grinder. Find that low. Find that high. You got it, right? Get up. Remember, get above that moving average. Trap in those buyers above the EMA and punch it right down again. I know we're at support down here, but if we have a lot of momentum going for those bears, there will be plenty of sellers waiting to short off the top of that channel. Traps, failures, and pullbacks as we go. As we take out the low, right? As we take out that low, watch that crown reversal for that move back up. Watch that break down, that retest, that 1, 2, and back up. We just talked about this on the S&P, right? It's actually going to be that 1, 2, and then pop up for that new channel. Again, I'm going over this basics here right now. Very similar though, right? Again, think about that short on the way down. And then, of course, once I get the retest, bears once, bears twice, buying there into those stops, and then grabbing those failures, those traps as it pops back up. I also wouldn't be surprised here. We go from 95 to 90. 90 is kind of the big number the bears want to hit next. It's a psychological level. If we take out that low, we pull back, and the market now blasts off that low. You know the drill now. Mark that low, mark that high, and that's when you can be pretty aggressive, right? Finding whatever entry setup you can get in off that high. A lot of my students these days, when they see this thing start to really crumble like that, they'll start stacking up orders, just getting into it no matter what happens. It's a very reliable scenario there. anywhere, like on a micro contract, right? Micro crude oil contracts at $1 per tick allows you to really scale into those moves, and you'll see examples of that in that free trading course. So watch as this thing rolls over. Again, watch at, the kind of the more it goes, the more we start finding those steeper channels. We find those prior swings. Same thing, right? Failure, very similar here that we talked about on the S&P and the Nasdaq. All right, guys, and hopefully tomorrow this oil will kind of get itself, get its own way here and give us some nice big moves here right now. Not that this wasn't a big move. This is what, a $4 move today, right? From 92.50, basically 96. So a $4 move, not a bad move, but we've been spoiled the last few months with those, $6, $7, $8 moves on oil. So hopefully we'll see another ripper here for tomorrow. But guys, that's my roadmap for tomorrow. What do you think? Got any questions for me? Drop the questions there in the comment section. Let me know if you love it. Let me know if you hate it. If you do, I'd love to know why. I'm always going to make this place a better place to learn and trade along here each evening on this video. And speaking of trading along, tomorrow morning, 8 o'clock Eastern time, the best place to be is in our trade room. We'll prep our charts, go over our patterns, and we'll trade together until lunch tomorrow morning. I'll put all the free class links. That's the best place to start. Grab the free course, learn the strategy basics, get that going, and I'll be ready for you. We open up every morning, 8 o'clock Eastern time in our trade room. I'll put all the membership links right below this video here tonight. Don't be afraid to call the office. I'm always here to help out. If you guys have questions, you can drop questions in the chat box there, the little chat tool we have here. And as always, you can drop questions in the comment section below. All right, guys. Hope you learned a bunch here tonight. Hope you use it to crush these markets on Wacky Wednesday. And I will see you guys here. If not tomorrow morning, hopefully I'll see you tomorrow in the trade room. If not, we'll come back and we'll do it again tomorrow night. Same time, same place, with some more fire coming tomorrow night. All right, guys. Be well. Be nice to each other. And be here next time, will you? Adios, amigos. Bye-bye for now.